Welcome to Trading the Close, everybody. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com, and I'm here to give you guys all the details on the trading action today. What did the markets do? What's moving? What's looking like the after-hours movers could be? All right here at Trading the Close at Verified Investing. So let's quickly go over a couple things here. We are seeing a late day sell-off. Take a look at this, guys. The Dow Jones Industrial Average is down 385 points going into the close. Now the kicker here is this, right, is that the Dow just last week closed above 40,000 for the first time, and now we're back to 38,469. So that's a big fall, 1,500 points just in about a week's time for the Dow Jones Industrial Average. Now, we know that NVIDIA's lifted up the NASDAQ and the S&P, so those aren't that far off of their all-time highs. But nonetheless, the NASDAQ's down 61 points here. We have the S&P down 41 points. Oil's down $1.25 on the day, gold down $23.50, and Bitcoin down just over $1,000. So we are seeing some downside action. There's no doubt about it. I'm going to explain in just 1 second as you follow me over here why the markets are selling off today. So this is your intraday chart of the S&P 500. We came into the day with a gap down. We went sideways a majority of the day, and now you're seeing a nice little sell-off into the end of the day. We're not at the lows of the day, but we're pretty darn close. Now, let's discuss why the markets were down today and why is there some fear out there. Now, this goes back to yesterday. Yesterday, there was a 2-year and a 5-year bond auction, and there was very little demand for the U.S. bond auctions. Today, we had the 7-year auction, and again, very little demand. Now, you might say, well, what do the bond auctions have to do with it? Well, guess what? When people don't want to buy your debt, when you're offering, let's say, 5% interest rates, well, guess what? To get people to buy that debt, you have to raise the interest rate higher. So we've seen interest rates go up today substantially. They went up yesterday substantially, and that is causing issues for the market. Now, I wanted to explain a little bit more about this because this is kind of a black swan type scenario that people have to understand could come into play. So let's do a hypothetical. We know that this year the U.S. is basically needing to refinance something like $7 to $10 trillion in debt. If countries or buyers are not willing to essentially buy our debt for the current interest rate, they will force the U.S. to offer a higher interest rate. It doesn't matter if the Fed lowers interest rates. If no one's willing to buy the debt, then we have to offer a higher interest rate. Essentially, the U.S. will lose control. The Federal Reserve will lose control of interest rates if this gets to an exacerbated level. Now, granted, we're taking a 10-step ahead approach here. That's not where we are just yet. But it is the warning signs that we have to be aware of. Everyone thinks the Fed has full control of everything. That is not the case. Don't let people fool you, folks. It is not the case. The Fed does not always have control. All right, looking at the 10-year yield here, this is the 10-year yield. Look at the last 2 days. We were basically at 4.45% on the 10-year. We're now at 4.616 on the 10-year, and that's a pretty big jump. Now, listen, where could we be going? Let's talk charts on the 10-year. Well, initially, I was even surprised at this move up, but what we do is we take this high pivot, we stretch it down here, and this gives us a short-term resistance level on the 10-year yield. So basically around 4.65, 4.66%. That should be short-term technical resistance on the 10-year yield. All right, so that's what we're going to be watching here tomorrow. So if interest rates push up a little bit, they should meet resistance that maybe will force them down. That might be a little bit of reprieve for the markets. All right. Let's talk about the movers today. So number one, we have big earnings after the bell, CRM, Hewlett-Packard. We also have AI, C3 AI is reporting after the bell. But today, during the day, look at this amazing move on ANF. Incredible, guys. The stock, again, right now up 24%. It had this kind of blow-off top where it almost hit $200, then reversed. Look at this longer-term trend line. Now, we are above it currently, but there's no confirming move yet. I'm still skeptical that it's going to stay above here and confirm. I think a top was put in right up here on that little tail that's forming, but obviously we'll have to wait and see. But either way, you basically have a scenario where we saw American Airlines warn on earnings, right? So we know people are starting to pull back from spending, whether it's for travel, whether it's for Disney, whether it's for Starbucks, whether it's Expedia, which is another travel company. But there are definitely certain retailers out there that are fan favorites, and those continue to see spending. And A&F would be one of those right now, Abercrombie & Fitch. Another one, Dick's Sporting Goods, having a very good day today as well. If we look at DKS, up about 16% on the day, and that would be another retailer that's still seeing very good, robust demand from the consumer. But again, I think it's important to understand that there's a divergence. You have the fan favorites that are hot right now, the hot places to go, and then you have everything else which is seeing a slowdown as the consumer slowly pulls back. Okay. I do want to check quickly in on CRM. CRM here as we go to the extended hours. Holy cow, what a drop on CRM. Holy moly. This is a big one, guys. This is a $260 billion company. Right now, we just dropped from 272 down to 242. That's an over 10% drop on CRM. Let's look at levels really quickly here, guys, all right? So what are we looking at here? So there's a level, there's a gap fill at 230 and then at 225. Let me put these lines in because, again, these, again, are just potential day trading levels. I want to go back to the to this. So we're still not near these levels yet, but these would be my two levels that I would watch. We have a gap fill, both gap fills. So basically anything between 231 and 225 would be the zone that I'd be watching for here. And we're right around 240 right now. But that is a big move. Holy cow. No wonder the markets were selling off into the end of the day. This was coming out. Now, again, I'm somewhat being facetious there, but kind of not, meaning that, yes, there is information that leaks out, right? One person knows these earnings. They tell their buddy who tells their buddy. And before you know it, it spreads like a wildfire in the markets. And it explains why we were seeing late day selling today going into these numbers. So that's a big sell-off on CRM, and I'll cover this tomorrow in the game plan. Again, looks like we hit a low of 242, and we're hovering right there. But again, $260 billion company down over 10% is a hefty drop for the markets to absorb. Going to C3 AI, as of now, I don't see any earnings out yet on this company, but we'll keep an eye on it. Hewlett-Packard looks like it is dipping on earnings as well. Not a huge mover. Hewlett-Packard, let's be fair, it's not like the olden days in the early 2000s when this was like a top play, but nonetheless, we are seeing a little bit of a dip on that one. And Okta is another one here. OKTA is the symbol here. Looks like it's whipped all over. Wow, it went down to 86 all the way as high as 102, but it's kind of fluctuating here, at least for now, close to the flat line on the day. All right, I'm going to check back on these, but before we go into anything else, I want to touch base on oil. Oil again, guys, take a look at this. This is something I was looking to short oil today. I talked about it in the game plan, and it just didn't fill me right up here. It is what it is. That's real trading for you. Sometimes you have to stick to your levels. It's the discipline of being a trader. Sometimes we get filled, sometimes we don't. But again, nice drop on oil today. Most commodities dropped because the dollar was up and yields were up. Just the way it goes. All right, speaking of which, let's look at gold. Gold playing out as the chart dictates it should, meaning you have the breakdown here of this upsloping trend line right here, bearish consolidation and a start to a move down. Key support's going to be around 2280-ish, give or take, right in this little pivot low right there. Silver actually held up relatively well today. Natural gas got pummeled. I did take profits with members in smart money stocks and ETFs as well as smart money commodities on this short here. We made some great money on shorting UNG and being long KOLD, which is the 2x short of natural gas ETF. Look at that drop, guys. Classic double top. And I guided you, if you watch the game plans, I guided you through on this trade to the downside, expecting that fall. I actually still think it goes lower, but as a trader, you have to start analyzing. It's down 15% in 5 days, right? From this high to this low. Is it possible that you're getting close to a small bounce? It is. And how much more do you want to squeeze out of it before it gets that bounce? You can always reshort it. These are the things that have to play through your mind as a trader when you're analyzing. Do you take profits and run, or do you let it continue to go down with the chance that it ends up pushing back up? All right, so those are just a couple little tidbits there. I do want to cover Bitcoin real quick. I know you guys love your Bitcoin here. Bitcoin is hammering into the key support here of the channel. So what you want to see if you're a bull, notice it held here and it's right there. You want to see this level hold. If we start closing like down here or down here, that makes it vulnerable for further downside into this channel, a reemergence into this downsloping channel. All right. So again, right now it's kind of safe. It's okay, but I want to watch to see where it closes. I'll update you guys obviously tomorrow in the game plan as well. And lastly, quickly, guys, I just want to go back and check in. Wow, 239 now on CRM. So again, looks like it got to 238. Remember, that 231, 230 area down to 225 is what I have in terms of support. It's more of a day tradable level, by the way, so understand that. It's where I'll be looking 238, 237, 230, almost 236. Amazing, guys. This is going to be a name that we're going to hear a lot about because this is a big player. C3AI reported numbers here. That stock is ripping to the upside here. In fact, I think it was Ben earlier today saying he thought this chart was bullish going into earnings. I didn't see it, but it is. He was right, and here it is up to the upside here, trading nicely to the upside on earnings, trading around 27 bucks. And then lastly, Hewlett-Packard still down, and Okta basically flat on the day on Okta. But really the story of the after hours is this stock here, 234. Look, you can now see my trend line coming into play here, guys. Wow, look at this. Let's see if it hits. I don't have my phone out or anything to be able to do a trade here, but this 230, 231 down, and then accumulate down to 225 looks very interesting. I'll let you guys follow it in the after hours here, but wow, what a mover here. This is going to be the name you're going to hear a lot about, and I got to go look into exactly what their earnings are, but I would say that they either missed or beat, but it's really the guidance that matters for earnings, guys. That's what it's all about. All right, I got to get going, guys, but as always, thank you so much for tuning into Trading the Close. You guys are awesome. The support you guys give me and the whole crew here is amazing. Thank you, and tune in tomorrow bright and early for the game plan at 9 a.m. Take care.